Well, I hope I do not insult you, but I think it's laughable to think that the Fed is on an aggressive tightening move when inflation is running, as all of you know, between 8% per annum and maybe 14, 15%. And the Fed there sits, and for the first time, after having said last year, we are thinking about the rate increase, increases the Fed fund rate to 0.5%, when, according to the Taylor rule, the Fed fund rate should be at 9.81%. The Fed is a completely useless organization that deliberately created massive inflation, a loss of purchasing power of money. It hasn't been evident so much in the dollar because the dollar has been strong. But when you look at other indicators like the growing trade deficit, you ask yourself whether the action of central banks do make any sense or whether they are destructive. So as a trader, I would say the Fed is a market manipulator of third class.
Okay, well, that
you could have a chimpanzee or gorilla run monetary policies better than the Fed. That for sure.
And when you say it or put it that way, yes, I think the Fed not raising rates by 0.75 basis points or even shelving the idea. I think a lot of us, we just look and we shook our heads and obviously we as traders, we just try to deal with the market volatility and what it deals with us. But I have to ask, do you, since it's been so long since we've spoken, actually I believe it was pre-COVID was the last time that we spoke, or just post-COVID as we went into lockdowns. And, obviously the world has changed, but we've watched the Federal Reserve just thinking about, and they're obviously behind the curve on inflation. So I'm sure you got more words for them regarding that, but what took the Fed so long to tackle this? Why was transitory? I know that's a word that probably shouldn't be used, but why was transitory so much in the thought process of Jay Powell for so long?
Because he's an incompetent bureaucrat. That's why at the Fed, you have to look at their CVs. None of them has worked in the private sector. They have no clue what the typical household in America and around the world does and how they live. They only care about pushing up asset prices and about stimulating consumption with fiscal and monetary policies. They don't command and implement fiscal policies, but they finance them. That you have to see very clearly.
Now, and that makes a lot of sense to me. But let me ask you this, when you talk about asset prices, we are obviously seeing, inflation globally, but what does it do to, I live in a place where real estate prices are very hot in the United States. And matter of fact, most places around the world are experiencing similar type of pressures, housing pressures. So what happens to some of these markets? Let's just talk real estate for a moment, and you just talk whether you live where in Asia you live or in the United States or in parts of Europe. What happens to real estate prices at this point globally? What are your thoughts there?
Well, I mean, I don't trade real estate. I own real estate and so forth. I don't buy it in the morning and sell it in the afternoon. But in general, I would say, when I look at monetary policies, not just among the Fed members, but also at this criminal Lagarde in Europe and Kuroda in Japan, that keep interest rates even lower than in the US, then in my thinking, the rate of inflation will accelerate. The loss of purchasing power of money will also accelerate. And there is a good chance that the whole thing will end up in a colossal mess. But I mean, really colossal mess with social unrest and so forth, and wars maybe, and whatever. If I look at the 70s, I started to work in 1970. I want to make this very clear. At the time, the 10 years treasury note in the US had a yield of 6%. And then we went up and down and up and down and finally ended up at 15.84% in 1981. And inflation during those 10 years also rose until 73, 74, and then collapsed. But then it rose again until 78, and then it went down, then it went up again. So you have these swings. But during those years, to be fair to first Burns and later Volcker, the Fed actually did something already in 73. The Fed fund rate went over 10%. And here we are at 0.5%. You want to bet on something, you better bet on inflation, in my opinion.
Yeah, okay. Well, in
inflation, I tell you, the bond market doesn't listen to the Fed anymore. It watches the Fed, but since 1980-81, when Volcker increased the prime rate to over 20%, the bond market has never gone down this much. Over the last 1 year, bonds have collapsed. And this is the big difference between this decline and previous declines. Because if you look at the 2000 bear market, the 2007 bear market, you look at the crash in March, April 2020, the COVID crash. During all these instances, the bond market rallied. So what people lost on stocks, they made a little bit of money on bonds, or depending on the asset allocation, they offset the losses on stocks with gains on bonds. But this time around, both has gone down, and cryptos as well. So there has been a huge wealth destruction occurring, and you can say thank you to the Fed for that.
And that's what I was
trying to all this.
I was trying to allude to that as far as housing, because when you talk about, you talk about where investors are making money, there isn't very many places. However, as a consumer, or as somebody, let's just say as an American consumer, and you hide most of your wealth, or most of your wealth might be in your home value. At least they have that lifeline for the wealth effect, trickle down effect of the markets. But do you see that lasting?
Except I want to make one point very clear.
Yeah.
We have to distinguish between the class of the boomers, such as I am. We own our homes. In my case, I've never borrowed any money for anything. And then you have young people. It's like in France, we just had elections. The old people voted for Macron. The young people, they didn't vote for him, because there is a problem among young people with affordability. The Fed has made housing unaffordable for your children.
Oh, so yeah, it's not just and it's not just my children. It's the young people, the 20-year-olds, the 30-year-olds.
It's very tough for them to buy a house, and the ones who bought the house, and they bought a house with mortgages of 2.7, 2.9%. The mortgages are now over 5%. How happy are they?
Right. No, I agree with you. I agree with you wholeheartedly.
And the government officials will increase the property taxes.
And that's happening across the United States as well. But I want to ask you, will that stay? That's why I kind of alluded to the real estate market. do you think that pillar of strength for the consumer, for those boomers or those people that own their homes like yourself or myself, do you think that will be sustainable? Because there's going to be obviously a lack of buyers as rates continue to go higher.
The housing market, in my opinion, is going to weaken. But you understand, there is not a huge supply of housing around. It's just the lack of buyers because of the affordability. So I don't expect a crash, but we could have a crash for other reasons if, say, interest rates really go up a lot, as I think they will. But it will take time. You know, I think we're in a situation, landscape-wise, and nobody of your viewers remember that because it was 1973, 74. The stock market had a peak in 1970. Then we went down into a bear market, but we recovered because of a handful of stocks. They were called the Nifty 50. They were stocks that would always grow, and they were as popular and as highly prized as Amazon, Facebook, Netflix, Google, and so forth.
Yep.
And they were the quality growth stocks. They included stocks like Kodak and Polaroid and Eastman Kodak, Xerox, all companies that then went bankrupt. Anyway, the bear market 73, 74 was accompanied by a rise in gold prices but extreme dollar weakness. And it was a lengthy bear market interrupted by strong rallies. It's like now in the US, the market is oversold. It's not as oversold as it was in 2009, but it is oversold. So I wouldn't necessarily short it here, and we can recover. I think for 2022, the next big trade is going to be the dollar collapsing. But it's not happening yet. But I think that will be eventually the fact when the Fed realizes the damage is so huge in asset markets, we can't really increase interest rates anymore. We can't follow through with our program to reduce the balance sheet. They've done that already in 2019. The Federal Reserve members are all doves, all dovish. They talk something now like hawkish because they see high inflation, but then they'll come out with an excuse. We have a high inflation because of Putin. We have high inflation because of the evil Chinese. They don't export enough to us. They'll come out with any kind of excuse. Politicians are born liars. Otherwise, they wouldn't be politicians, and they will never say the truth. They will never accept any responsibility. And the Fed members are also government officials. Nothing different.
So, you know, you hit on
their salaries are safe. Their salaries go up.
Right.
Whether the economy is good or bad, the salaries go up, and they screw the individuals. They don't care about individual people in America. They only care about themselves.
True, very true. But so let me ask you about the dollar, because this is going to be a touchy subject, as the dollar is really the safe haven right now as we speak.
Correct. Right.
You see the
now.
dollar rallying. It's trading at 104. We're touching levels that we haven't seen on the index since 2017. So how does that continue to play out, Mark? If you have the dollar that's rallying because stocks are coming down, they use the dollar as a hedge for risk aversion, if you will. How does the dollar supposed to sell off and the stock market supposed to sell off?
I know two safe havens until recently. One was the NASDAQ 100, the FANG stocks and related stocks, and Bitcoins. And now you can look at the safe havens. The NASDAQ is reflected by the ARK Innovation Fund, down 70% from the high. These are the safe havens of people who don't know history, who don't study. how markets move.
But I understand.
Right now, the dollar is a safe haven. Yeah, I agree with you. Before the yen used to be considered a safe haven.
True.
And
But
the worst currency, they consider the worst currency the ruble. Now it's up 12% against the US dollar.
That's a good point. And also the sterling.
I love safe havens. I love the safe havens.
But what can change? Then let me ask you this: what can change the dollar other than loss of faith, or is it at what point does that inflection point hit, if you will?
I think it will hit when the Fed has to admit we can't increase rates and we can't tighten. And number two, it will hit when foreigners lose confidence in the US for whatever reason. I mean, when I look at the team Biden-Harris, it is for me a miracle that anyone would still trust the US dollar.
I really can't argue with you there.
I mean, I have to say, you look at these two people. I mean, I just read that Mr. Biden's popularity is now even lower than Kamala Harris. I find this a wonderful statistic. I never thought that this could be achieved.
So if you lose. So if you lose, the dollar loses its value, is it going to be against other currencies, or is it going to be against commodities or other assets, as we're seeing right now?
This is the big question. As a trader,
yeah,
I'd say most likely all currencies will be bad, paper currencies. So, the hard currencies is, as you said, to some extent, real estate cannot be increased dramatically because of zoning rights and this and that. The supply of gold, silver, platinum can't be increased dramatically. And some cryptos probably are okay. But this is the big issue. Where do you hide? And if you hide, say, in gold, who is to say that the government, after having locked you down in your buildings, will not take your possessions away?
And
people are so stupid, they accept what the government tells them. They accept, it's a good idea to get vaccinated.
When you talk
they
about,
believe the lies that the governments are dishing out.
When you talk about losing faith of the U.S. government, for example, wouldn't I'm asking this your opinion, as the U.S. seizes Russian oligarchs' yachts and possessions, is that something that could really start to influence people's confidence in the US dollar and treasuries, situations like that?
Well, I want to tell you, quite frankly, I have assets in Europe through several banks in Switzerland. And then I have assets in Asia, in Hong Kong and Thailand, Singapore, and so forth. I am beginning to think that I should have less and less assets in alliance countries. Alliance countries are the US and then the vassals, Canada, Australia, the European moribund economies, and complete useless democracies, and even Switzerland, and have more assets in countries like India, China, and so forth, that are different than the alliance countries that have some own opinions, that do not want to be a vassal of the US.
That's interesting that you, as obviously somebody living in a different part of the world with assets all over the world, are thinking that way. That's something to chew on. So I want to ask you, about gold precious metals, you know, you look at gold and the value of gold. It's gone higher since we had the COVID lockdown. You know, stimulus globally has been thrown at the markets and at the economies. Gold has rallied, but you know, everybody talks about inflation. Well, inflation's here, and gold hasn't performed how a lot of people, a lot of traders, a lot of analysts, a lot of economists had thought gold would perform. Is gold going to have its day in the sun, if you will, one of these days?
But I would entertain the view that maybe in this environment we could see all asset prices go down. In other words, stocks go down. Some stocks may already be close to low, but a lot of others are still relatively high. Real estate goes down, bonds go down, commodities go down, gold goes down, but it goes down much less than, say, financial assets. Now, let's assume we are in a bull market and you own financial assets and you own gold, and gold goes up 10% and financial assets go up 30%, then gold has underperformed. But say we are in a bear market and financial assets drop 30–40% and gold only goes down 5%. Then you, as an investor, should say, I have massively outperformed other people because my assets are down in gold, say 5%, 10%. There are other people, the young people, the Generation Z, they lost 80–90% of their money in meme stocks, SPACs. All these clowns who were on TV all the time and telling them to buy this and telling them to buy that. And the Reddit crowd, they lost 80–90%. So what do you rather have? Gold that has disappointed, or your assets that are down 90% and you're getting a margin call, and so you have to sell your Bitcoins as well? So we have to see this all in the right perspective, you understand? As I said, the ARK fund is down 70%. She was the kind of leading apostles of investing in anything that is new, even it had no prospect of making any money. But as long as it was new, it was okay.
So, Mark, when you talk about trading or investing in the 70s, you know, I cut my teeth trading in the late 90s with the technology stocks, me personally. So I've been through the .com bubbles, and I've weathered the storms. I've seen the ups and downs, but there are a lot of traders. There are lots of traders on trade desks, portfolio managers that really don't have that type of experience, and they're not. This is the first time they're seeing the markets that don't rally. They're seeing assets or certain names that have lost tremendous amounts of value. And you talked a little bit earlier about the Nifty 50 back in the day. Today we still have the FANG stocks. We have the ones that are holding up the boat, the pillars holding up the house, maybe, if you want to use that analogy. Currently, I want to ask you this, based on your 5 decades plus of in the markets.
Yeah, you want to say, based on the fact that you're already senile.
You've seen it, but you have seen it all, Mark. I have to say that. What do you say to the investors of today? I mean, I still look at the S&P and the NASDAQ. I mean, we're not too far off the highs. Maybe the NASDAQ, certain names are, yes, certain stocks are, but the indexes aren't. They're holding up relatively well for now. What do you have to say about the new investors, the new generation of traders out there?
Well, this is very interesting question, because, like I mentioned, in the 70s, we had a peak in nominal terms. It was in January 1973. But inflation adjusted, the peak was actually already in 1966. So the rise until 73 was inflation adjusted, not impressive. And then throughout the 70s, we went down inflation adjusted until 1982. In 82, inflation adjusted, we were down 80%. And we were at about the level of the 1920s, like 50 years earlier.
Wow.
But in nominal terms, we moved sideways in the 70s. Why? Because the growth stocks, the Xerox and Kodak and Polaroids, all went down by 80%, but then they rebounded, but not to new highs. But what drove the market was energy and mining. We had a huge gold bull market at the time, and we had a huge energy bull market. I mean, oil went from like $1 in 1970 to $50 on the spot market in 1980. And the entire energy sector, which is today like 5% of the S&P 500, was at the time 28% of the S&P 500. So it is conceivable that we have weakness in the popular stocks, in FANG and related stocks, but we could have essentially strengths in other groups like mining companies or in oil companies, or maybe we have, as an example, emerging markets. They've already down a lot in Hong Kong. You can buy property companies at 50% discount to asset value. Now, I accept the view that maybe asset values will come down. It's perfectly possible. But you understand, once you can buy something at a 50% discount to asset value, I think one should have some money in these type of situations. So my idea is, if you are a trader, what you should do is have some diversification, and don't believe that you should put all your money in one thing, and that because you think it's the right thing to do, that it will be the right thing. The market is more powerful than you and me. So the market may have a different view than yours and mine. But I've seen the 73, 74 bear market. It was 2 years, and everybody always thought, oh, the market's gonna rally. And at the end, it was just flushed out in November, December 74. And bonds, they kept on rising in terms of yields, but in 1970, 73, 74, 75, 76, nobody ever dreamt that interest rates could go this high. They went up, like on the bonds, the treasury bond, to 15.84%. And after the peak in interest rates, nobody ever thought that interest rates could go as low as they did. Nobody.
Yeah.
So, I will say, you have to accept the madness of markets. And as I suggested earlier, the markets are going to be much more extreme and volatile because these incompetent people at the Federal Reserve have created a situation where the risks were eliminated for a long time, and then they come back massively, and the markets destroy these arrogant, incompetent bureaucrats at the Fed. That's what's happening.
Well, with that being
And
said,
all the financial sector, I want to stress this,
yes,
all these financial guys, the hedge funds guys, the fund managers, and the economists, they always applauded the Fed. Why? Because they are financial people. They get more money when markets go up, so the fees go up. None of the major brokerage houses, none of the major banks has ever criticized the Fed. They always applauded them. Oh, it's great. Interest rates are going down. The market is rallying.
so what happens when rates start going up and they continue higher? Like maybe we start a cycle that we hadn't seen since the 70s. What happens then?
then asset values go down.
Well, with that being said, I'm gonna leave you with one last question. I know last time we spoke, which again was a couple of years ago, maybe a year and a half ago, and we talked about just briefly about cryptos, and we've seen a destruction in a lot of these digital assets. Whether it's a NFT or a lot of altcoins. But surprisingly or not surprisingly, and this is why I want to get your opinion here, the blockchain technology, big names like Bitcoin, Ethereum, they've still maintained their value. And since we've talked, they've been incorporated in a lot of financial assets in Wall Street. So I guess the question I'd like to ask you is, are they going anywhere? Like cryptos in general? I know there's going to be, there's a lot of the crypto names that have fallen apart and completely lost almost all their value. But what are your thoughts on the crypto market in general, or the technology in general?
Well, I think that paper money is going to essentially cease to exist. I don't think it will cease to exist, but because you have to see one thing: crypto depends on electricity, on the net functioning. If someone switches it off, try to go and buy something with a credit card or with an electronic wallet. So there'll be paper money, but maybe the paper money will have different qualities than today's paper money. But in general, I say everybody has to know for himself what is best for him. I have traded cryptocurrencies, and I think some will have some value and a lot of them will be worthless. And as is the case with precious metals, I am concerned that some people in government with the intellect of Harris Biden will take it away from you. So this is a big issue nowadays, that whatever people make money, they're going to tax it or take it away. I mean, I'm deeply concerned about, say, if the government today said, or tomorrow, gold is no longer an asset that you are permitted to hold. You have to tend it to the government. And if you don't tend it, you're going to lose your social security. You're no longer allowed to travel. You're not allowed to go to a supermarket, and you're not allowed to buy cigarettes and beer and so forth and so on. They can do that all. They've done it already with the vaccines. But the people never rebel against the government.
So you think that is entirely possible, and with certain assets now?
It's not possible. It's very likely that it will happen.
Okay, but when you're dealing with cryptos, that one of the reasons why people own crypto is to eliminate that risk. But do you see that still as a risk, even with the crypto
Look,
markets?
I'm not an electronic engineer, but I can tell you, if the governments decide that cryptos are illegal, except for the cryptos issued by the government, it will be very difficult to make any payments with cryptos.
Yeah, that's a great
But
point.
the crypto people who are such great experts after 3 years, they all tell me I'm wrong. But my idea is that this is something that an electric engineer has to solve, because in my view, you can control it. And the government may one day say, yeah, we have cryptos, but the ones issued by the government, not the one issued by you. It's like in theory, you're not allowed to issue your own money. Crypto is some sort of money. Don't forget that.
It's a great point. Well, Mark, I love this conversation that we're having. I actually enjoy our conversations quite a bit, and I look forward to the next time we have a conversation. But how do if I'm a trader and I'm an investor, I'm hearing you. How do I follow your work? Do I just go to the gloom, boom, and doom?
Well, you
website?
know, the gloom boom, intellectually, the work is in the gloom, boom, and doom report. But you understand, my reports are not about buying in the morning and selling in the afternoon. They are strategic reports, and they stimulate people to think about issues and to look at the world from a different perspective than, say, a typical American State Department official or a typical neocon in the US.